Okay, so groundwork number 5 and last is reassess. Okay, now after you've done all the necessary groundwork, your credit score is in order, your employment history is straight, you have savings, you have a down payment, you're gonna want to reassess your financial situation, right? So basically, what I mean at this point is, you're gonna pull your credit report, you're gonna see if there's any outstanding items that you need to take care of, right? You're gonna assess your down payment amount. Do you have enough saved? Very important. You're gonna assess your savings. You're gonna see if you're gonna be using your RSP contribution, and what about your spouse, your partner, what have you? Are they gonna be using RSP contribution? Are you gonna need a private mortgage insurance? Are you gonna be able to get over that 20% benchmark for the down payment so that you can avoid mortgage loan insurance, or are you going to need the mortgage loan insurance, which is totally fine. There's nothing wrong with that, but you're going to want to know these things, and your lender is going to want to know these things. And the more prepared you are, the more information you have on your own situation, the easier it's going to be for your mortgage lender to get you the right loan with the right terms, right? And also, you want to be careful of making any large purchases around the time where you're going to be preparing yourself to get a mortgage, right? So what I mean is, large furniture, sale, transactions, or even buying a car, things that are going to threaten your credit worthiness in the eyes of lenders, right? It's because they want to make sure you're stable and you're not using any of your savings that you're falling back on or jeopardizing financial security for payments for furniture and any types of things that's going to take a chunk out of your credit. So basically, what you want to do is be stable and avoid any large financial expenditures. Okay, that's a big no-go with lenders. So get your facts together, no surprises, and make sure you know more about your financial situation than you did when you first started. Okay, so reassess. So you paid off your debt, your credit score is sky high, you saved the money for your down payment and all your incidental fees, lawyer fees, condo fees if you may want a condo, especially millennials. And my next video is going to talk about the benefits of condo lifestyle. But basically, after you've done all that, most people think it's time to celebrate. They go on condos.ca, realtor.ca, they start looking for houses, and essentially that's not the right thing to do yet, right? So just because you have all your groundwork in order, you did Mike's 5 steps, you're good to go. That doesn't mean necessarily that you're going to just start looking for houses, right? Because looking at potential houses can be fun and exciting, as an experience. But first, you're going to need to figure out how much you can actually afford, right? So that's the time to go speak to a mortgage lender, right? And a mortgage lender is going to tell you how much you can afford. They're going to give you your options. They normally give you a lot more options than, say, a bank would. If you walked in the bank and say, I want a loan for a house, they're going to give you options that are tailored to the bank's needs, okay? Intent, wink, wink. So basically, you don't necessarily want to walk into the bank. You can, if you have assets with a bank, if you have a good relationship with a bank, getting a loan from a bank is going to be no problem. But let's say you don't normally have assets with a bank, or you don't have a good relationship with your bank, you don't have other, products with them, you're going to want to speak to a mortgage broker, right? And they normally come with either a fixed rate or a variable rate, okay? So there's differences between the two. It's a little bit complicated, but I'll go through it briefly with you right now. And what all it means is that a fixed rate is something that it's not going to be dependent on the market, right? So normally they give you an interest rate that's locked in, let's say for 5 years, right? And sometimes that's good because the market can be volatile, right? So let's say, the market peaks, interest rates go up, you're good. The market crashes, it's a recession, depression, you're still good. Your mortgage is fixed for 5 years. A lot of times what happens is that 6 out of 10 people actually break their fixed mortgage before their term is up. What happens is it comes with a bunch of fees, right? So the fees, they can, tens of thousands of dollars you can pay for breaking your mortgage. And that's why it's important to look at not just the interest rate of your loan, but all the terms and conditions that apply as well, right? Some people get so focused on the interest rate of the loan, they miss all the little details like prepayment options, right? So if you're able to pay your loan early, make extra payments towards your monthly payments and bring your principal down, you can pay it a lot faster. You can pay it a lot quicker. That way your interest is not going to be tacked on for 25 years. Maybe if you have that prepayment option, you'll be able to pay it off in 10, 15 years. Who knows? You might get into a good situation, right? So that's why it's important to look at all the details, right? And some of the things I'm going to be going through with you on my blog, on my posts, my Facebook, Instagram, and also my website. So I encourage you to stay tuned. I'm going to have a lot more about mortgages. I'm going to have a lot more about fees, interest rates, home buying, the perks, and also some of the pitfalls that we see right now in the industry, right? And especially for millennials, I think it's time for us to get armed with all the tools we need. We got to get more prepared. And the series of videos I'm going to share with you are going to make sure that you have just the right amount of knowledge and tools to get in the home market and also make the right decisions when you're shopping for mortgages and loans.